Wild swings on volatile markets have them climbing and slingshotting back up, trying to get towards the highs. That's to be expected, is what we're going to learn from Gary Glover at Novus Capital. Good morning, Gary. How are you?
Yeah, no, I'm great, Chris. How you going?
Well, very well. We've got a little bit to cover on this week because you're going to drill down on the timings and explain why that's a bit to be covered. You've also got some gold stocks that you've highlighted to explore this week. So if you're interested in the gold stocks, you can click on the chapter in the description below to jump ahead to those. But we're going to look at this lower high formation that's happening in the market because we're about 45 days from that market top or coming up towards that signpost. And you're going to tell us what we can learn from previous market cycles that can point to an opportunity that's in front of us at the moment. So if you could explain sort of how that works on the NASDAQ and then walk through these charts to tell us how that opportunity works for us at the moment, that'd be really interesting.
Yes, I mean, the main thing there is I just saw a few people sort of getting a bit bullish here, obviously off the last low. And so I was thinking, okay, well, we normally get like a sort of base. You always tend to get a first high low sort of set up there if you wanted to go long. So obviously sometimes the safest place to go long is the first high low, but the same thing sort of sets up on the sell side. So the safest place to go sort of short is probably not to be picking highs. It's actually looking for the first lower high. So if we go back and study lower highs, the most sort of common lower high is to sort of, when you're in these really strong trends like this, is to sort of break the trend line and then to come back and make a lower high. So typically there's some sort of strong timing there that, probably the most common timing there is what we call like a quarter year from the high, so which is kind of 45 calendar days. So that's the sort of something that's the thing that we really need to get past that before we're really out of the woods here. So if you're bullish here, then that's all fine there. But we historically that's the key timing to get past. If we get past that timing, then maybe we can go a little higher. If we don't get past that timing, we start to turn down there, then that's the one to be most nervous about. And that's the one that I'm most nervous about. It's the one that I always keep an eye on, because historically most of the biggest corrections and even some of the medium-sized corrections, that's the most common setup, is to set up a right shoulder sort of quarter year from the peak. So particularly if there's sort of cycles running that high. So that's just the one we got to be careful of there. Obviously we can show here that we've had a reasonable sort of move down. We've broken that sort of rising wedge, and we've also had a bit of volume there, which makes me nervous as well. So I guess, I just don't think we're out of the woods here yet. So just got to be, until we sort of get past that, I'll feel a little bit less nervous. If that makes sense. Yeah.
Well, that's not out of the woods yet. So we'll see how that pans out. As you said, broken the wedge on the downtrend line, on the lower trend line, broken that down. Yeah. If we look at the S&P 500, you've got a monthly chart here, and you're saying sort of what's the most common first lower high is a question you've posed. There's a bit going on this chart. So the red lines. Yeah.
I've told a little lie there. Actually, it's actually not a monthly chart. It's actually just the 2018 chart there. So I was just going to I was kind of showing that how common this setup is. I really only had to go back to 2018 to see two of these of the exact sort of setups here. So in 2018, we saw the market sort of run up pretty aggressively into that top. It did sort of tip over a bit there, but then it sort of bounced in a three-way manner up to the 45 days from the high, and then that ended up being another leg down. So typically when after they sort of make that lower high, they usually go down 15 days, only 15 days. So it's only pretty short. That's the most sort of common setup there. Sometimes they can go 30 days or 45 days, but normally it's pretty short duration. We saw even like later on in that year, I think it made a high there in September there, or
September, October, thereabouts.
Yeah, late September there. And that market there, the first lower high, so basically had a bit of obviously peeled off quite a bit, but then it bounced basically up into the 45, and then that ended up sort of being, again, we had an aggressive move 15 days, which is kind of the normal sort of pattern. Ended up having a bit of a bounce, another lower high, but it was pretty much that down move was all over within 45 days. So they're normally pretty quick off that high. So that's the thing that makes me nervous here, is just the sort of the setup to be just to be mindful of is sort of, this is the one that happens over and over again. If we look at some of our biggest corrections in history, then I show sort of the 87 and also 29, and maybe getting too drastic here, but there's plenty others as well. As I think 94 and 2001. It's the same cycle, just repeats over and over again.
Let's just jump in and have a look at that 87 chart, because you've dug it up here, which is great. You've got the Dow Jones 1987 top.
Yeah.
You've got the timing cycles here. So that's the first red line's the 90-day, right? So that's 90 days up from that sort of low congestion. It almost gets to the high, but then rounds out another 30 odd days before it goes for the lower high.
Yeah, so all those things you're looking for. You're looking for that quarter year rally, sort of from probably a swing low into a peak, and you're looking for a bit of a that's a pretty strong trend, the last leg normally, and then once you sort of break that trend, haven't showed the underlying there, but we can see definitely that's overbalanced. It's basically that was very small corrections on the way up there, and then that leg tipped over into the first lower high, and then again normally they sort of peel back 30 calendar days and they rally up to the 45, and then they peel off to the 150, which is exactly what 87 did there. So that's the sort of normal pattern. Sometimes there's still slight variations in that, but the time element there is one. So that's the one that makes me nervous, because that's historically some of the biggest moves follow that exact sort of method there. We can sort of see in 29, pretty similar. Last key sort of swing low. Market went up pretty aggressively into that 1 quarter year, so 90 calendar days, and then the 120 was not the low, but then it rallies back up. Yeah, but then basically your right shoulder is the key. That's the one that's really, so your 45 days or the 135 days, and then again you just tend to sell off really quickly into that 150. So sometimes you go a little bit further. He went a bit further here, but that's there's slight variations there. But the key there is the right shoulder. That's the one that sort of sets up over and over again. So I mean, don't take my word for it. Go and have a look at lots of charts and lots of tops here. If you study sort of tops, you'll see this over and over again. So if you go and look at 2001, I think home market, go and look at 94, I think even 97 as well. There's plenty of replications of that cycle there. So just when I see, a quarter year or a half year rally into the top, we see a right shoulder, and we've been in a really aggressive move trend, and we just sort of tipped over that trend, then that's when I get nervous, because that's when you get those sort of sell-offs there. So if you look at our market, the S&P 500 here, we can see it's sort of we've definitely sort of gone a few sort of half-year cycles into that high. So I've gone sort of, I think, 2nd of September into the 4th of March. That's sort of basically half a year, sort of 180, and then we go up into the high. And there's even a 90 into the high as well from the previous swing low. So it's a few sort of short-term cycles and a few long-term cycles all, finding that high. And then, so the thing I get nervous about, okay, if it pulls back 30 calendar days, which it did, and then it rallies back up into the 45, which it has done, then that's when I get nervous, because that's how the majority of these sort of bearish first setups here. So I know a lot of people are saying, oh yeah, we've broken up out of that downtrend, but that's irrelevant, because the history, they've all broken up. So what I want to see is, come Tuesday, Wednesday, we need to be sort of above last night's high in the US. Otherwise, that'll make me nervous. If we start to sell off from here, then I'll be somewhat nervous. So so that's just a classic cycle which is repeatable over and over again. And so just really, I mean, it might go up, I guess come sort of Tuesday, Wednesday, it'll either be proven to be sort of nothing we should have worried about, or possibly might be something we should really worry about. So we'll find out then. But just makes me nervous, just because that's a sort of similar setup to most of the other sort of larger sort of sell-offs here. So yeah.
So if you're looking at entering that on the bearish side, it's not too far from the ultimate high, as you said, around the start of September. So there's not a lot to lose between the stop, but there's a lot to gain if it is actually to come off as quickly as the other ones did.
So I'd probably want to see some reversal sign. We haven't seen that yet. So far it's been reasonably, like I think some of those other highs there, you started to sort of see a little bit of weakness on that shoulder there. not sort of early there, but yeah, we probably just want to see some sign of weakness here in the next 1 or 2 days. So to me, if I saw that, that's probably when you want to follow it. So but yeah, I'm just pretty cautious here because it's just set up exactly like the other ones have done. So that makes me nervous. And I thought I better have a look at some of the other markets as well. So it doesn't always come to fruition, but I noticed there's a few cycles within the Aussie market there. But I just noticed we've sort of, I think the 30 and the 45 days from the high have been pivot points. And then now we've rallied up into the 60 days, which can be an important pivot point for our market. Our market does do lots of sort of 60 days sort of, I think the last 2 peaks have been 60 days apart. So just some sort of short-term timings to sort of monitor there. So yeah, just a few cycles into that high as well, which makes me a bit nervous as well. So yeah, just got to be cautious here. Look, I might be overanalyzing this, but having overanalyzed all the other tops in history, I just know this is made exactly the same sort of setup here. So that does make me nervous. So yeah, so just got to be on your toes here. That's all.
Well, being on the toes as the market's working through these timing cycles, and definitely it's pinpointing days to be extra critical of what the market does. If we move on from the indices and then drill down into the trading opportunities that can be presented within the indices, we're looking at the gold stocks. You've talked about the reflation trade. You've talked about inflation quite a bit. You've picked up Northern Star as a chart that you're looking at, and a possible false break. Now, for newer followers, they might not know that this is one of your best trading strategies that you work with, the false break. You're very well known for it. So we get a bit excited when you put them in the report. It may be early days, but what's Northern Star pointing out to you, and why are you looking at it?
Yeah, so it has gone to a new low and then obviously not followed through. And then we've got a reasonable reversal and reasonable volume there on that first week there. So that's a good sign there. And obviously breaking up, going above the previous swing, breaking above the previous low, even the body as well this week as well. So those are good signs there so far. So that looks pretty positive. So, but the volume really hasn't got too excitable yet. So it's a bit more. So I probably want to, I think it looks pretty positive. Just want to see maybe look for the first counter move here. So if we get a little bit of a couple of days down, and then I just really want to see the volume lighten up here, because I sort of, if we're going to get a big move up here, which I'm hoping, like any move, you're hoping you get a big move, then normally you should see sort of bigger volume as well. So far the volume's okay. It's just not outstanding, I guess, so far. So, but that can be okay as well. So what we want to sort of see is if it pulls back here, we want to see lighter volume again. So we want to basically see no one, if it pulls back for a week or two, or even for a few days, we want to see even less volume there. We want to see really lighten up. So yeah, so the signs look pretty positive there. Just missing a bit of that really strong volume there. Kind of similar with Newcrest as well. That's sort of, I think we got an extra sort of trend line, kind of a longer term upward trending line, and then we've got a false break of the slow as well. So we've got two sort of positive signs there. Volumes not bad of the week of the low. Didn't get much volume on the second week sort of follow through, which is a little bit of a concern. But yeah, so it'll be about basically if we get a little congestion here, we just don't want to see some selling here. So signs are good. Probably like to see a bit more conviction in the buying the volume. But if I see less conviction in the selling, that's still pretty positive. So yeah, that's what I'm looking for.
Right. So they're not buying territory yet, but you're definitely watching them very closely and looking for that volume signature to really set up the trade. And if you've got to confirm that the false break is maybe finalized and setting itself up for that larger move that we hopefully see coming out of these false breaks.
Yeah. So I've taken a few small positions and the golds here, but nothing too big yet. So I've sort of got a starting posi, if that makes sense. And I'm just looking for evidence that this is going to be a bigger move and a stronger trend. So that's what I'm looking for. So yeah, so far so good. Yeah, we've had a bit of a pullback there. Yeah, just want to sort of see it pull back and and just not much selling coming in. So that's ideally what we're looking for. Yeah.
Well, that's the extra analysis that you're providing in between these reports. And if somebody wants to talk to you, whether it's about the timing of a short position, whether you say Tuesday, Wednesday, and how that's building, or whether it's what the right timing is to go long on a gold stock or that kind of thing. Are they right to email you or contact you on the numbers that we've got on screen there?
Yeah, perfect. That'd be great. Thank you.
Right. Well, thank you very much for the insight, Gary. We look forward to next week.
Thanks, Chris.